Fidelity bonds. If you're a business owner looking for Fidelity bonds, watch this informative video. It looks at Fidelity bonds, coverages, cost, and more. What are Fidelity bonds? A Fidelity bond is a form of business insurance that offers an employer protection against losses that are caused by its employees' fraudulent or dishonest actions. Also known as an honesty bond. This form of insurance can protect against monetary or physical losses. Fidelity bonding is one branch of the surety business. Like all bonds, a Fidelity bond guarantees a contract made between two parties. Employees are seldom asked to enter into a written agreement to perform their duties honestly, but there is an implied contract that employees will act in the best interest of their employers. The Fidelity bond guarantees this honest performance. What are the two main types of Fidelity bonds? There are two types of Fidelity bonds. First-party bonds, which protect companies from harmful acts by employees or clients, and third-party bonds, which protect companies from the harmful acts of contracted workers. How much do Fidelity bonds cost? The average cost of a Fidelity bond with a $1 million policy limit is just over $1,000 annually, or less than $85 per month. A Fidelity bond with a limit of $100,000 costs about $250 per year, or less than $21 monthly. How does a Fidelity bond cover? Fidelity bonds cover all fraudulent or dishonest acts of employees. The insuring clause is very broad and takes in almost every form of unlawful taking of property by an employee, whether it's technically a larceny or embezzlement under the laws of the state. A Fidelity bond covers more than just money. It covers theft of any kind of property, real and personal, including bullion and manuscripts, trees and shrubbery, automobiles, aircraft, boats, and animals. The insured is not required to own the property. The Fidelity bond covers the loss of any property for which the insured has a financial interest, or any property for which there is a legal liability, and also for any property held in any capacity, whether or not there is legal liability for the property. A Fidelity bond will not pay for loss caused by an employee's mistake, or lack of judgment if there is no intent on the employee's part to commit fraud. The Fidelity bond pays only for direct losses. Indirect or consequential losses from interruption of business are not covered by the bond. As an example, if an employee steals a machine worth $1,000, the $1,000 loss is covered. However, if the employer must stop work for 3 days until the machine is replaced, the $5,000 loss for lost production time is not covered. Why do businesses need Fidelity bonds? Have you ever seen licensed, bonded, and insured on a contractor's ad, sign, card, or truck? Well, they are talking about Fidelity bonds in part. They are a necessary part of the insured program of almost every business that wishes to be fully protected against loss. Where burglary, robbery, and theft policies protect against acts of criminals, Fidelity bonds protect against the actions of those within an insured's organization who are in a position of trust and who are often better situated to cause large-scale losses than outsiders. Many businesses have comparatively little exposure to loss by criminal acts of outsiders, but all are exposed to loss by employee dishonesty. Each year, businesses in the United States suffer billions of dollars in losses due to theft from trusted employees. Some of these losses are so substantial that the businesses are unable to continue in operation. The sad truth is that this coverage is often extremely underinsured because management cannot admit that a high-level trusted employee might betray them. How do I get a Fidelity bond quote? Call the Fidelity bond quote line at 855-767-7828 from 8 a.m. to 8 p.m. Eastern Time to start your free quote, or simply click on the link below.